Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economy and the investment markets. I've been talking all year about a seesaw pattern, kind of this up and down, really meandering, going nowhere. Most equity markets around the world, and the U.S. basically included. What we are seeing, though, is basically a pullback in interest rates down to about that 2.5% level on the 10-year. So actually, treasuries have done okay this year. They're actually up a little bit in value because rates have come down from about 3% in January down to about 2.5%. Now, while I don't believe this is going to be a long-term trend, firmly, Janet Yellen, the Fed president, is very accommodative for the bond market. But as she continues to pull back their bond buying, rates actually should be going up. So a lot of people have been asking us, why are rates actually coming down just a little bit? And why is it that I still feel that rates will probably slowly move up over the next 3 to 5 years? Simple. If the economy continues to expand and get a little bit better, eventually the bond buying that is being cut back by the Federal Reserve is going to basically add bonds into the marketplace. This is actually going to push rates up slowly over time if the economy continues to expand. And I firmly believe all the indicators that we're seeing are showing slight expansion, probably between 2 and 3% GDP growth this year, and probably something similar over the next 3 to 5 years. Of course, our thesis will change if the information we get starts to change. It gets modified either to the up or down side. One of the things I want to talk about is housing. Housing has actually been lagging, and housing is a big part of our economy. But even with a lagging new start housing sector, our economy is still growing well over 2%. So this is actually a net positive. If we can get housing to kind of kick in a little bit, which I believe it will as we get into these summer months, which is typically historically a great time and throughout the end of the year, I think housing can contribute to GDP growth in addition. I'm not looking for spaceship or rocket straight up GDP growth. I'm looking for somewhere between 2 and 3% throughout 2014. And over the next, let's say, 3 to 5 years, something similar, potentially better if our dysfunctional government can get together and actually work on pro-growth strategies that are actually going to improve the economy for everybody. But generally speaking, we like what we're seeing. We look at our recessionary indicators, of course, daily, and those are updated on a regular basis. And currently, again, we're not seeing any real recessions. We have made a few adjustments in our global tactical portfolios, so we're in a couple areas that have been relatively stronger as of late, and we're going to continue to obviously preface relatively stronger sectors. I firmly believe that the 2.5 on the 10-year that we're currently seeing is something that may hang around for a while before we start moving back up. Nothing goes straight up and nothing goes straight down. In fact, if you remember last summer, interest rates hit about 1.6 on the 10-year, moved up to close to 3%. We've had this little bit of a pullback in interest rates to 2.5. I think that's the pause that they then basically pushes rates slowly higher throughout this year. Of course, if you're a bond investor, you want to make sure you have ultimate short-term maturity in bonds, because the longer the maturity, investors who are chasing yield or stretching for yield, unfortunately, are going to be hurt the most. If you're a client of Resney Wealth Management and you have a question, please call our office. If you're not a client and you want to experience the difference we provide, call our office for a consultation. There is a difference, and we do invite you to experience it. Make sure you listen to our live TV show this Wednesday from 6 p.m. to 6:30, and make sure you listen to my live radio show this Sunday from 10 a.m. to noon Eastern. Have a safe and profitable week.